So we are now awaiting the Jackson Hole speech by Fed Chair Jay Powell. For all the attention that is being given to his speech, do we really expect that he's going to give clues that exactly what the Fed is going to do in its September 18 meeting? Well, clues are there and clues will be searched in this speech. There are questions about the magnitude and frequency of rate cuts, but Powell is now left to deliver a brief review of where things have been and some guidance about what lies ahead. It looks like the market has made its mind up that a Federal Reserve is going to start cutting rates in September and likely will keep cutting through the end of the year 2025. But I would not be surprised to hear the words that the Federal Reserve continues to remain data dependent, coming in again and again. We expect Jay Powell to be directionally unambiguous, but specifics about how fast and exactly when will depend on the data that emanates between now and the September 18 Fed meeting. The speech will be delivered at 10 a.m. Eastern Time from Fed's annual conclave of global central bankers in Jackson Hole, Wyoming. The conference is titled Reassessing the Effectiveness and Transmission of Monetary Policy. And in fact, another thing is that even if they cut interest rates, how effective that will be. That is going to be the central theme of this annual conclave of central bankers. If there were any doubts about the Fed's intentions to enact at least a quarter percentage point cut at the September 17-18 Open Market Committee meeting, they were put to rest Wednesday because minutes from the session showed a vast majority of the members in favor of a September cut, barring any surprises. Philadelphia Fed President Patrick Harker drove the point home even further by telling CNBC that in September we need to start a process of moving rates down. A main question is whether the first reduction in more than 4 years is a quarter point or a half point, a topic on which Harker would not commit. Markets are betting on a quarter, but leaving open about 1 in 4 chance for a half, according to CME Group's FedWatch. A half point move likely would require a substantial deterioration in economic data between now and then, and specifically would weaken the non-farm payrolls report, which is expected in 2 weeks' time. I believe that it is not only today's report, but the more important reports of GDP coming out next week. Also, important reports like earnings reports like Nvidia and CrowdStrike could also have a major say in where the markets move. So let's not be totally focused on the Jackson Hole speech, but I still feel Jackson Hole primarily has been a very important clue, and between his words, people will search for answers. I'm sure that's why this speech is considered so critical. In previous years, Powell has used Jackson Hole speech to outline broad policy initiatives and to provide clues about the future of policy. At his first appearance in 2018, he outlined his views on the interest and unemployment rates considered neutral or stable. A year later, he indicated that rate cuts were coming. In a speech delivered amidst racial protests in 2020, Powell unveiled a new approach that would allow inflation to run hotter than usual without rate hikes, in the interest of promoting a more inclusive jobs market. That flexible average inflation targeting would precede a period of surging prices, leaving Powell in the ensuing 3 years to navigate a delicate minefield of monetary policy. This time around, the task will be to confirm the market's expectations while also indicating his impressions of the economy, and in particular the moderating of inflation pressures and some concerns over the labor market. And the rest, I think he will say, is data dependent. That will be the sum and substance. But yet, the key will be Chair Powell's tone, which is more, as markets are expecting it to be dovish. That's why the futures, the Dow Jones, S&P, Nasdaq futures are higher. Inflation, as you know, continues to trend towards a 2% target, seemingly at a rate exceeding the consensus. Combine this with the signs that the labor market is also softening, and when gets the sense that there is little need to retain a hawkish stance. So that's the backdrop in which we have the day ahead of us, and an interesting period lies ahead. Not only today, as I explained, the next week is going to be even more critical. Particularly after Jay Powell's speech, we also have speech from Austin Goolsbee, who is the president and the CEO of the 7th District Federal Reserve Bank of Chicago. He has been very hawkish, and his comments and speech will also be looked forward to, along with that of Neel Kashkari. Now, Neel Kashkari has been many times very cautious, and his words of wisdom are considered very crucial. And definitely people look at his words with great. He's the Federal Reserve. He's with the Federal Reserve Bank of Minneapolis. So, president of the Federal Reserve Bank of Minneapolis. So his words will also be looked at very carefully at Jackson Hole. Sum and substance is that most of this they will try to talk about inflation being under control, yet there being issues pertaining to labor market and more data, and on the basis of which they would finally decide on September 18 where exactly the interest rates are headed from here. Friends, to get to know more about our predictions about the US markets, as I told you, it is not just today's speech, but some substance of many things: the GDP report, the jobs report, what our expectations are, where we expect the markets to head over the next few days, weeks, and months. Do join our Prime or Prime Plus groups, which are addressed specifically for the US markets. For the Indian markets, you can join Premium, Premium Plus, which are addressed specifically for the Nifty, Bank Nifty. For all, you can WhatsApp us on 982-086-1044. Alternatively, you can also email us at globalmoneyinvestor@gmail.com. globalmoneyinvestor@gmail.com. Happy investing and have a great day ahead. Take care. Bye-bye.